Africans, welcome to this panel. My name's Nicholas Norbrook. I'm the managing editor of the Africa Report. We're part of the Jeune Afrique group, who've co-hosting the CEO Forum. I hope you've been having a good forum. So welcome to this panel, which is part of the overarching theme here at the ACF. Africa at the table, not on the menu. Here's the thing, the era of easy money is over. Global forces are competing over capital, critical resources, and the industries of the future. Challenges like climate change, AI disruptions, security crises are coming thick and fast. African leadership today will determine the economic trajectory of the continent for the next decade. So, which guiding principles do our CEOs need to help chart a course through these choppy waters? I'm going to level with you, I have no idea. But we're fortunate to have a glittering panel of wise women and men who should help us. I'd like to call to the stage Beata Habyarimana. Beata served as the Minister of Trade and Industry for Rwanda, where she played a pivotal role in the successful implementation of the African Continental Free Trade Area Agreement. She's now the Group CEO of BK Group, the largest financial conglomerate here in Rwanda. I'd like also to welcome to the stage Kone Karekezi. Kone is the Group MD CEO of Africa Re, the largest reinsurance company in Africa and the Middle East. And I'd also like to welcome Kaure Akindele, the CEO of Coronation Capital, a financial group that's been hoovering up banking and trading and insurance and fintech licenses left, right, and center. Very interesting story. We will dig into it. Thanks for giving them a warm round of applause. So, Beata, let's jump in to a key issue. Yes, the mics are here. To a key issue, this is a leitmotif of the conference this year: building resilience, building sovereignty, strengthening the trading links between African countries. We keep hearing about having a common market for financial services in Africa, but we rarely actually transact in African currencies, often dollars. Of course, there will be harmonization issues, but don't we need a currency that's used here on the continent? Could the EAC be a good laboratory? Do you think it would have made the EAC more resilient to withstand the shocks of the last couple of years? So that was about 100 questions. You pick the one you want.
Thank you. I think I will start with just finding the name of that currency. It will be Africa currency, Africa franc, Africa shilling. But definitely, I think before you have a common currency, you start with having a free trade area. After that, you have a common market. And once you have a common market operational, you can just think about having a common currency. I think with Africa we've been shaken because we depend a lot of imports for finished products. And this is destabilizing that dream of having higher intra-African trade levels between the African countries. When it comes to EAC, I think I wouldn't say that having an EAC currency would have stopped us from being shaken, because even that zone depends on importing from outside, and basically trade is done in US dollars or euros. But definitely, I would say that for EAC, there has been a good experience with regional payment and settlement system, where shillings are being used more than francs. It is not reaching the level people would wish to see, but at least people are trading in their local currencies. And this just reduced the dependence to US or hard currency. What about the whole continent? I think the AfCFTA started well with a free trade area and an agreement. Having the common market for the all 54 countries was not that easy, but some of the countries today operating, including Rwanda. I think it was started with 7 countries ready, and they assume that as they see it operational, they'll be having more and more joining for the benefits of it. And I've seen that many just even celebrate it. But definitely, to have a common currency, I think there are some activities you can have before and which requires a strong political will, like having a common external tariff. EAC has a common external tariff where whatever is done within that common market is easily traded. So this is a starting point. Second, I think, which doesn't require to have out of the continent participation, is to have between the countries mutual recognition, standard compliance, sanitary and phytosanitary standards, where why is it hard for me to sell in Congo or in Tanzania just because the compliance is not there? This depends on the country. The political will of raising up the bars for the standards of what we produce. We have good products, we have organic products, but what is really missing to have the appropriate standards so that people can have a mutual recognition? That flow of trade would bring us easier to either having first payment and settlement system mechanism, and why not having a common currency. But my weight will be more on being able to settle between our countries with our local currencies, because if you want to have a common currency with the EU, it took more than 40 years, and you don't have that time.
Absolutely. Corné, would you take us through the impact on African financial markets that the departure of many of the international banking franchises has had? I know the politically correct thing is to say this is absolutely wonderful. It gives a chance for African groups to spread their wings, and there's much truth in that. But hasn't it also been a blow in terms of access to global capital markets?
Yeah, thank you very much. Good afternoon, everyone. And it's a pleasure to be on this prestigious panel. Thank you, Nicola, for that question. There are many people who are here, bankers. I can see Access Bank, chairman. I can see a former CEO of Access Bank Rwanda, and also someone here on this panel. So I would be not really comfortable because they know better than me. You should give them microphone. Now, I think that in the years around 1980, when the continent was going through difficulties, many reinsurers left the continent, the biggest one. And also recently, I think 2015 with the commodity shocks, the Barclays Bank, others left, sold their entities and so on. And this gave us, of course, an opportunity. And today, I don't think that a reinsurer like Africa Re or Access Bank or any other bank has anything to lack in comparison with any bank in the world, because expertise and the knowledge is available at the click of a WhatsApp message. So the difference is that we African entities, we are better positioned to serve our market. Because first of all, why have they left? They have left because often they don't understand our market. Second, they have so many issues of compliance and other things. And also, we should not forget the currency risk, which was one of the main. And for insurance and reinsurance, it was also the size. For them, the size of our business is too small. I remember one banker recently who called me from Geneva. I said, we want to close your bank unless you raise it to $5 million US, and I don't have $5 million US, then I have to relocate it. But these foreign bankers and the foreign reinsurers and you name it in the financial sector, they have never left the continent. They are still around, coming in a briefcase. Others have teams, they call them flying teams. They are targeting net worth clients, and also they are targeting stronger insurance companies. So it's up to us to build our own market, as it has been said many times since yesterday. And this is really the role of the political leadership I think the economic players, the private sector, they are ready to step in. And we have to target in the future to go also to their place, to take our companies, and some of us have started to do it, and go in their big market and play there as well. We have to be very good in quality, in excellence, to be comparable to them. Thank you.
Thank you. Now, Koda, I have another question for you, but I feel it's unfair. You should probably have a swing at that, given your background. Maybe you can fill us in.
Yeah, I think it's an opportunity for the local players, in the sense that, as you said, most of the international banks haven't left. What they've done is that they've removed a lot of their risk in their eyes, and they're flying in bankers and still trying to do financing out of New York and London, which hasn't really changed that much, because even when they had the local presence, most of the structured finance and various other things came out of London and New York, and they had specialized teams to do that. Now what that creates is local champions, the likes of Access Bank, Standard Bank, and various other banks to come and fill into the hole. And you kind of saw that a few years ago with Standard Bank retreating from international. They sold most of the bank in Argentina and to refocus in Africa, and it's done a lot for their share price. So I think in a sense it gives the opportunity for local players to create regional champions to understand the markets better, that will not leave because of the business cycle, which we see with a lot of the international banks. And that also can help, especially a lot of our local champions, grow across business cycles. And you've seen that a lot of the local companies that have done really well, most of their funding will come from local banks who understand the market, understand the business cycle, and will stick with them through it.
Fantastic. Well, let's stay with you and stay with the business cycle. Many countries on the continent try to spend their way out of the crisis of the last few years. There has been subsidies on energy and food. There's been borrowing to fill the gap. But there hasn't been an attempt to boost productivity at the same time, and that mismatch has been complicated for many countries. Do you recognize that picture for Nigeria, for example?
I think that's a very accurate depiction of what happened. I think you saw a process where I think the first act of many countries was save lives, and that's what they did. There's no point having a country if you don't have people in it. And so a lot of countries, I think Nigeria was very active in a lockdown, in gathering resources and making sure people survive. Now, I went through that process. Some subsidies were introduced to try and help people through that process. But it also created a situation where you had to improve your productivity because your spending had increased. And when your spending had increased, the world had changed as well, in the sense of before COVID, there was the Africa Rising narrative, and there was a lot of it was fairly easy to raise capital. African countries were going to the Eurobond market, raising the capital, and now you had a situation where that market was now closed off. So what do? So you had countries like Nigeria, which had a more developed local debt market, local capital market. They were able to raise money locally and ride through that. Other countries which had a less developed debt market, Ghana, for example, some other countries, they had more difficulties doing that. So I think lesson number one was develop your capital markets.
Yep.
I think a lot of countries have taken that on. I think for countries like Nigeria, to take it to the next stage. I think two was you need the institutional framework to understand that, one, the geopolitical situation had changed, and that also had an effect on your economy. And so how do you basically address your increased spending but reduce revenues? And for a lot of countries, naturally they will go to debt, but that was shut off for them. And so they had to find a process of trying to increase productivity, invest in infrastructure to try and grow productivity so that your revenues will grow to match your spending. I don't think many countries have been successful in that. We use Nigeria as an example. Nigeria tried to spend their way out of it. Now they're paying the price. in that. I think the new government has decided that it is not politically savvy to cut spending. And so they're looking at ways of increasing revenue, either through tax, oil production, and various other things. And you've seen that across a lot of other countries. So I think there's been a whole gamut of situations that have occurred. And you're seeing some of it in the politics. If you look at what's happened in the Sahel region, a lot of the issues that are happening with the wave of coups that have happened is really economic pressure that has brought down on the governments and has led to these kind of situations. But I think Africa on a whole is in a better position than it was in the 80s. There are better institutions. You have DFIs like African Development Bank, which is better capitalized, the AFC, which is new, which are helping in this kind of process. So I think the more that happens, then it can help the governments try to get a grip of this, the better.
Fantastic. I guess one of the ways that countries can mitigate some of that economic pressure and relieve some of the FX crunch that so many economies on the continent have faced is by boosting exports. Rwanda's had a very interesting experience in getting its high-value agricultural products into the Chinese market. Perhaps, Beata, you could explain a little bit how you went about doing that.
Yeah, it's a good success story. It's a success story, I think, where Rwandan people can export straight to China. I will start with the sanitary and phytosanitary standards, where you have your products recognized and able to get exported there. It's something where internally at the domestic level you have to work on, and I think every African country can do that. So at least you can get a level where you have an agricultural protocol on imports. That's what has happened a couple of years ago, where Rwanda is exporting chili to China, not even yet meeting the demand. There is still a huge potential there. The second, I think we have to find a way of, there's that political will. Let me say, people have to know the African country. I think sometimes African countries are misunderstood. It comes to the theme where either at the table or on the menu, people just describe you the way you shouldn't talk about yourself. So that economic diplomacy plays a role where you explain what you do as a country, as an African country, and then be able to reach that agreement. Third, like Rwanda, we have a direct flight to Gansu, to China. So for agricultural products, I think it's something critical. How do we create our air routes? So we have that direct flight so that agricultural products can be taken there and reach the place in good conditions. We have also coffee, which is traded on a digital platform through Nairobi, but where, because of the information is live, it's easy for people to select and to buy. But finally, I think one of the key elements, and I say it from BK perspective, is to be able to have cross-border payments and being able to pay. So BK jumped into that. Today on our app, you just go for Alipay, paying through Alibaba, click, done, cash sent. So I think those depends on the political will, but also the private sector to jump into those opportunities. There are things private sector can't do, like that economic diplomacy, but when you go through what has been created and look at it as opportunity, you can make business. So I would say that for us it has been a route open, and we look for even others, but definitely that digital component is also important to be able to sell with lifetime information, not having some intermediaries in between, and allowing trade to be done in these turbulence macroeconomic conditions without so many losses or something like that.
Fantastic. Corne, I mean, we mentioned China just then, and there's obviously fantastic opportunities to connect with markets around the world, and there's a lot of learning as well to be done. Obviously, pension funds are your the heart of creating these deep pools of capital. Tell us a little bit about how pension funds transformed Indonesia, how they transformed Malaysia, what Africa can learn in terms of building assets that can deliver strong returns in the local currency that we've been mentioning previously is so important.
Yeah, thank you. In another panel this morning, we discussed about infrastructure and how pension funds and life insurance, long-term life insurance can contribute to bridge the gap in financing. So it is said that China developed due to three things. One was education, another one was export, boost of exports outside to build the funds they wanted, and savings, up to 50%. We, as you know, in Africa, our savings level is low compared to GDP. So we have to put in place institutional frameworks to allow savings based on what we know, which other countries have done. And we have in Africa one model, which is South Africa. South Africa has the highest insurance penetration rate, I think the third in the world after Taiwan, Hong Kong, and the UK. And up to 13% of their GDP comes from insurance, not even pension, insurance alone. So which is a tremendous amount of money. Probably they did it because they were under appetite. I don't know how they did it, but it is so well organized to the extent that your gardener at your home or your domestic is insured at least three items, at least health, at least loss of income in case of unemployment, and so on. Of course, they have issues of high level of unemployment at the moment, but people were working in the mining, for example, since the times of apartheid, they were insured in life, health, and accident. So that tremendous amount gives you the leverage to invest in long-term, at home, without pressure, without political pressure, and also with a perfect match of your asset and liability in your currency. You can't believe that they created a fund called Sasria 100 years ago to cover political violence and the accident, automobile accident of hit and run cars. And it was 5% of, 5 rand per liter at the pump. So today Sasria had a huge amount of funds, billions and billions, which were piled up over the years as reserves, and they are used by the country for different reasons. And it came to play, of course, during the Durban riot in 2021. I think almost 2 billion of it was taken because of the distractions of things in Durban and across the country. So this is an example of a country which is in Africa, which has done so well, and many countries can do it. So we need legal, political will first, because I used to make a joke that today, if you want what to do in anything, you go to ChatGPT, they will tell you what to do. So there's no need. So it can even write a speech for you. So we need a will, political will, to do things with quality, with excellence, as others have done it. As President Paul Kagame said yesterday, there's nothing which can be done elsewhere which can't be done here. So pension funds in South Africa have the highest percentage of investment in equity. And equity is lacking in Africa because debt, when you say debt, it comes from outside, it comes with the political conditions, it comes in a currency which we can't match with our income and so on. So I think life, long-term life business and sector and the pensions is something we have to put a lot of effort as African if we want to be politically independent and economically independent. Thank you.
Thanks very much. Coyote, there seems to be some interesting overlap here between some of the growth that we're seeing in infrastructure in Lagos. There's been some, the metro lines are finally starting to arrive. That's taken a while, but I think the pension fund growth in Nigeria was a big part of that story. So, I mean, by all means, explain that to us, but also what other ways do we have to deepen these pools of capital? Do we just have to wait until the demographic transition when we start really seeing savings rates, or can we do it faster?
I think I'll start with insurance, because it's interesting that you mentioned South Africa. I think in Nigeria is one of the most underinsured in Africa, given our population. And it's more of a cultural thing than anything, because every once in a while the government tries to enforce mandatory insurance, especially car insurance, and people just don't follow through with it. And it's kind of one of the things Coronation is looking at, in the sense of hitting it two ways. One is education. You need to educate people about insurance, why it's important and why paying the premium and what they can benefit from it. But also in the sense of finding innovative ways of reaching out to people. South Africa is lucky because it had a structure which is a lot westernized, so they could use that structure to push out the insurance products. We haven't got that kind of leverage, so we have to look at things like digital, mobile phones, using that, because obviously with registration of IDs through mobile phones, people have a unique ID now. And so we can push insurance products, KYC, and various areas of that. So using those kind of platforms to reach out to people, and using agents and various ways. So trying to increase the penetration that way, and obviously seeking government help in doing that. Now, what that does is that with the more insurance funds you have a separate pool of capital, separate from the pensions, which you can use for long-term investments. And the ultimate is to have a large pool of insurance funds, large pool of pension funds, all in local currency, which you can fund longer-term investments like infrastructure. Short-term, you can probably use capital markets, and we have a very active CP market in Nigeria, so short-term funding is not a problem. It's more the long-term. So we're trying to address that, and we're not the only ones. Other people are trying to address the insurance area. When you look at pensions, it's one of the legacies of the Obasanjo regime government in early 2000s, the pension reform. It has generated, I think right now, depending on the valuation, about $14 billion worth of capital has been put up. And when you look at things, a lot of the Lagos infrastructure projects, yes, they've taken a long time to put in place, but it's the confidence that Lagos has in the fact that if they issue a bond in Naira, the pension funds will take up most of it. And with that structure, what that does twofold is they have a pool of capital for local infrastructure investment, and you're seeing that in a lot of the infrastructure projects that are pushing through in Lagos. But it forces the other state governments to look and say, well, Lagos can raise this kind of money, let's put institutions in place to do that. And also from the federal government level, because I mean, the Minister of Finance was talking the other day about trying to use pension fund money for infrastructure projects going forward. And they have to look at the best way to try and garner that money. So I think it's important, still more can be done. I think that less than 5 million Nigerians actually have pensions. If we have a working population of between 70 to 80 million, you can see there's still a long way to go in that regard, but it's a very good first step. And as we build trust in the market and continue pushing and developing new products, we'll see that grow, and that pool of local capital, which is urgently required, will be there.
Fantastic. So is that something that you recognize, Beata, the need to accelerate the creation of these deeper pools of capital in our economies across the continent, and any ways we can turbocharge this process?
I hope I'm not the only one recognizing it, but also the audience, because I think it's something we are witnessing on a daily basis, and I wouldn't say that it is scaring, but it is significant. I do concur to what Kade was saying, and maybe the other thoughts I have, I think in Africa we have to work on getting our stock market integrated digitally, so that I can sit here, seeing what is in Rwanda Stock Exchange, I can look at what is in Morocco, I can look at what is in Cairo, I can go down to South Africa, just sitting from here. I think it's something we need to have so that you have access to real-time information and you can have an informed decision made. Should it start from the private sector, from the governments? I think all of us, we need it. Private sector can raise the finger up and say, we need this and push it, but also the government decision should be taken place. I think one is the first element, which I think is crucial. And it goes again with the fact that I believe having it digital would facilitate even the layman to go for savings. We know how the mobile penetration is across the continent. And I think it's saving is more, yes, we don't have enough resources as per se, but let us talk also about the culture of saving. So we save in nature, in kind, but if you have the appropriate tools, we know how mobile has been spreading across the whole continent, it would be going along. Third, I think for those capitals or things getting out of the continent, I think we should have innovative financial instruments. Africa is green, on its shores it's blue. So be it climate, green or blue bonds, I believe that in other continents they need it. It's also another way of raising capital, bringing it back to Africa, having those dedicated programs, but definitely pushing people to rediscover again Africa, and not just having it the way they did it from far. And I think it's an opportunity Africa has better than any other continent to bring back some specific capital flow.
Fantastic. And Corneille, did you want to come in on that in terms of the accelerations? I mean, we heard about the building, the sort of the 100 years of the building of that insurance fund in South Africa. Mm-hmm. We don't have 100 years. What should we do?
So there's an issue of culture which my friend has mentioned. I would say let's change the culture, because in many things we are facing as Africans, there's that issue of culture. We have to change it. Culture of quality, culture of excellence. One of the main things, for example, why people don't trust insurance companies, there is a really a low level of trust because of experience they have had when they have a claim. It's regulation. I can mention three markets in Africa, big, where you have like 50 insurance companies. The 20 at the bottom are not real insurance companies. And the regulator doesn't have the courage to change that. It's a political will. And so this is a bad signal to clients, to people, to the new generation which are growing, which want them to do better than what we have done. So that's one example. But there are many which are just at our reach. We can do it, but it doesn't. Maybe it comes from other issues, corruption and political partisanry, appointment of people who are not competent. So we have to change the culture. We have to change the people. We know what to do. We have to change the culture. We have to change the people. And coming back to insurance, with technology which has been mentioned, it has given us a lot of opportunities to change this. Think about the platform of Amazon in the whole world. You buy one thing, they tell you with 7 steps or 10 steps where your product is until delivery. What if we do that for insurance claims? Morocco is building one. Mm-hmm. Tunisia is building one which we have financed through our Africa Re Foundation. And we have funds to finance many other countries but they don't want. They don't ask. So here's my pledge, even Rwanda, if you want. Those who are insurance, we can finance it. Nigeria, we have financed NICOM, and today the platform is up and running at the return and the statistics. So they have to add the other layer. I think Cote d'Ivoire as well, we financed it. Now it's working. We can make a lot of effort to curb the issue of fraud in insurance, transparency in claims management, and predictability on the customer service. Then the new generation will trust insurance, and also there are other things to do on the side of regulation and so on. Thank you.
Fantastic. Thanks very much. Please.
So I just wanted to add to what you're talking about, especially in terms of mobilizing savings, and you talk about innovation. I think in terms of mobilizing savings, there are two issues. I think one, there is a lot of savings in a lot of African countries, but it's just not monetized. If you go to like northern Nigeria, there are people that have hundreds of heads of cattle. Those cattle are worth something, but we won't count them as savings because we can't monetize it. I think that's where the innovation comes in. And my fellow panelists mentioned about a green Africa. People have savings, but it might not be in the westernized way we look at savings. So we as financial institutions have to look at how can we be innovative in a way to monetize those savings? Because they are savings in a way, we just need to be able to bring them into institutionalized form. I think that's the first thing. I think secondly, trust is key. There's a trust deficit on a lot of these issues, especially when we look at longer term savings. And that's why things like pension reform are very important in Nigeria, because initially there was no trust. That trust has been built over time. And the interesting thing now is that anytime the government seems to hint that they want to use pension money for something or the other, there's a lot of outrage. And people come out and say, look, why? And they have to explain why, which I think is a way forward and is good. And so we're getting there. I think, but we need to be more innovative in trying to mobilize those savings, because we can't continue to be looking at things through the Western prism, because there are certain things we do differently, and we have to bear that in mind.
Fantastic. Thank you, Cody. So, I mean, we mentioned about changing cultures, and cultures are always about people. Beata, when we spoke previously about the traits of CEOs, and they can be financial sector CEOs or they can be other CEOs that you've worked with in the past, you mentioned a key one would be agility. The kind of CEO who can navigate this kind of climate has to be agile, ready to navigate, cope with the shocks, and also flexibility towards new technology.
I will start with that last one. I think when you talk about, let's say, generative AI, one CEO might think that it's a black beast and then say, I can't understand it, I'm not a tech person. But definitely, that openness of saying, let us look into that is crucial. Talking about today and tomorrow, it's hard to think about a business without having AI. So, but agility comes more on the decision-making process, in my view, where you keep having a crisis number 1, number 2, and number 3, and everybody's seeing what is happening, but taking a decision takes time. It shouldn't be done in a hurry, but definitely there is a cost of not taking a decision. And crisis is the new norm. So more CEOs to change in the behavior of how we do take decisions when it comes to solve a thing. Agility also comes with, because when you talk about agility, it means there are turbulences there. There are some troubles, something which is changing, which is not stable, and then you have to be agile to navigate through that. And I think that when it comes to, I would say crisis, but even less than a crisis, how does a CEO communicate with their teams? And looking back, let's say, on how COVID took place, we have some good stories. where people navigated in a way of communicating with their teams to be able to keep running the business. And they are where that communication was a big gap, just shutting down. And then after 2-3 months, you just pay the heavy bill of not having been able to discuss with your team to find other ways. And communication doesn't mean informing. It means you sit around and then you receive the thoughts of everyone sitting at that table, and you also give yours, and we all think together. I think it's something which will be permanent in the future. It's more in that collaboration and openness. It used to be with all the hierarchy of the big CEO, let's say the group CEO there, and then you have the manager at one level. It's a whole culture. But definitely for those who do not opt for a clear communication where you involve people to tell you and then you think together and create that business, there is a cost. Definitely there's a financial cost. And if I'm to talk about agility, I think it's more on that there's no formula, but the way you move into that will bring more value than standing there and trying to solve things on your own. And it's, but there are so many threats. I think we need
collective intelligence. I love it. I think that's really, really important. Corneille, when we spoke about this previously, funnily enough, given your background, you said that the CEO who's understood diversification is the one who will thrive in these kinds of new normal crisis.
Yeah, thank you for that question. Yeah, obviously for companies which are doing business in many territories, cross-border business, and those who have an international rating, there is a lot of volatility and uncertainty, and you never know which country this will hit. It can be even a politically stable country. You can have issues of macroeconomic mismanagement or mistakes. Turkey is one of them, for example, with 73% of inflation. You can't even imagine how they do. So you can't, if you are a large company today, you can't afford to be in one country. This is geographical diversification. I don't even talk about diversification in sectors, horizontal or vertical diversification in an industry. But the currency issue, for example, which has been a big plague in these 3 years in the past, especially in Nigeria, in Egypt, Ethiopia, and so on. So the issue of non-convertibility of funds, the issue of non-transferability, you can have your money in US dollars on your bank account. You can't withdraw 5,000 US dollars. This happened to us in October in a country I will not mention. And there is another one where we have 48 million US dollars stranded and so on and so on. We know the challenges of airlines operating in some market where they can't afford fund. That's why diversification for me, for international businesses, it is extremely important. So now when you come to rating, financial rating, with the Standard & Poor's and so on, that's also has helped, for example, Africa Re to have the A rating we enjoy, because our funds are not in one country. Again, our funds are spread across many continents, which means that when they take the country risk, for example, they consider Africa Re as not a South African, where we have our biggest operations, and so on and so forth. So we have, the growth we had last year, for example, came from the international market, because the premium income, reinsurance premium, are paid in US dollars from outside to our bank account, while in many of our markets, I'm paid in local currency. Even the countries which are paying, for example, in US dollars, but they use the exchange rate at the time, at the date of transaction. So there will be, in 2015, our top line declined by 7%. In 2016, we declined by 5%. And at that time, we started to go to Deloitte to open a syndicate so that we can grow internationally. So, but this is applicable as well in East Africa, for example. Okay, there could be a country which is growing and you are struggling to grow here and so on. So diversification brings risk mitigation, resilience, and also opportunity for growth.
Thank you. Kaede, for you, it was courage. CEOs putting their money where their mouth is from Aliko Dangote onwards. Can you explain why that's really important in the rough patches, this ability to stay the course and perhaps even seize opportunity?
I think it's very important because as a CEO, even as a successful CEO, when you're trying to do something maybe new or want to expand, you always have the naysayers who come and say, be happy with what you have, let's go in. And I always use Aliko Dangote as an example because by any stretch of the imagination, that refinery project was a mad project. This was a man who was already stupendously wealthy. His cement business alone is Pan-African, and he would never have to work again. But he decided to bet everything on a refinery and petrochemical project. A lot of advisors, international advisors especially, told you that you can't do that, you can't build something that big in Nigeria, it will never get finished. But he kept going. Even some of his financiers withdrew their money in midstream. He had COVID, he had lots of issues, but he just kept going. And there he found that a lot of the local banks stuck with him. The Nigerian government stuck with him. And we're seeing the benefits of that. But a lot of people would have stopped midriff. I use another example, Thor Resources, that have a mining concession in Nigeria. Everyone said he was mad. Nigeria doesn't do gold mining. You can't build a proper gold mine in Nigeria. You have to do artisanal mining, and there'll be theft, there's no security, and it just never work. But he went for it, and he decided to go, and then he had a choice. And this is where I think the courage to make a decision also comes into play, because he had a choice just before COVID, when he was choosing a drilling partner for his, well, he had a couple of Western companies, some Canadians with experience, and a Chinese company. And he chose the Chinese company. And talking to him now, it made his mind, because during COVID, most of the Western companies left Africa. They packed their bags, they went back home. The Chinese guys locked down in the middle of the bush in Nigeria and stayed and finished the mine. And that's why his mine is producing now. So I think courage is important. You have to have the belief, you have to have the courage to go through, backed up by your experience, obviously, and your expertise, but to push through and try the impossible. The biggest refinery project in the world is now sitting off the coast in Nigeria. There's gold mining in Nigeria. Liquid Telecom, for example, has the largest network of fiber optics in Africa by indigenous company. And when he started in 2009, laying down the fiber optic, and he went to DRC, everyone like, you're crazy. You're never going to make any money from DRC. It's a war-torn country. But it's all paying now. It's now a billion-dollar company. So I think that's why, for me, courage is important. And you find that those who are successful and continuously successful have that.
Fantastic. Thanks so much for that, all three of you. Okay, Q&A time. We've got 10 minutes. Do we have anyone with a question? Don't be shy now. I have questions for days, so just while you're thinking. Beata, Kigali is positioning itself as an international financial center. Lagos wants to do the same. What makes it, what are the ingredients in this complicated
I'm just getting stuck with the fact that it's complicated, but still it's a cake, so it means it's sweet. I think it's an ambitious but a very important dream we see of having the Kigali International Financial Sector being created, basically to attract capital in Rwanda, and also to be a catalyst for Pan-African investment. This because it has been, it's seen that we can't just wait for people to be interested, we have to attract investors. It used to be a time where people were just asking or waiting for people to get interested from Africa, but definitely now it's being proactive and attracting capital. It requires, if we start with the first point, it goes to regulations. There has been a lot of reforms. I don't think between 15 and 20 or 25 laws being reviewed, changed, having some specific clauses, so that when investors screen what are the features of the red carpet, they understand that this should be the destination for their capital. Second, in the complexity of it, you have to build the skills so that anyone who wants to locate funds or assets and funds managers who want to domicile it here have all the support for the operations. And this, I think, it's something which takes time, but which has its own value in it for the long run. Africa is young. Rwanda as well is young. I think it's 70% are below 35. So it means those are the dot generation, eager to use all the digital tools, eager to work from where they are, servicing across the globe. And I think it has multiple effects, including job creation, but definitely being able to serve those who decide to come. There is a huge way of tax incentives, also or some vacation provided, holidays provided to allow people to really have their business run. Recently, I think the KFC signed a finance trust corridor with Singapore to build that trust, to be able to collaborate, to partner. And I think definitely it's where many of the businesses should be heading to, with collaboration and partnership, so that Singapore investors get more confidence in what is taking place in Rwanda. And we know that Singapore is some steps ahead. And I assume that will be also other type of corridors of that magnitude, but definitely to create that trust so that the flow of capital would be finding what they need in Singapore to find it here, and tomorrow to find it in Mauritius or in Nigeria. It is not for Rwanda. I think it's for the African continent. It is not for Rwanda. Those who come here are not for Rwanda. It's more for having those investments here on this continent. And I think it would be, the ideal will be to see it being reflected in other places where there is a strong political leadership to make it happening, and where there is a dynamic contribution from the private sector, where, you know, even like if you work with those fund or asset managers, having the time of interesting them on what is taking place, I think it's on both sides. And it is not resolving the whole issue of attracting capital in Africa, but definitely is one way among others.
Thank you. Any questions from the floor?
Yes.
Fantastic.
Good afternoon. My question is for Connie. You mentioned diversification, geographic diversification as something for CEOs to consider. What are your thoughts around essentially products or product areas that are not currently served in the markets that even the CEOs serve? The example that comes to mind is trade credit insurance, for instance, in a lot of our markets. It's dearly needed and it's absent. You're a wholesale insurer. What are your thoughts on this? Thank you.
Thank you very much. Any other questions in this round?
Okay, good afternoon, everyone. I'm Bomi from EcoBank Transnational. I wanted to ask a question around pension fund and their contribution to development of African countries. So I wanted to use the example of the South African pension fund, specifically the government employees pension fund. I wanted to know how they were able to scale that to the extent that they're even able to invest in corporation. And how can that level of scalability be achieved across other African nations? Because if you look across other African nations, the attention around pension has largely been centered around private sector employee. The public sector employee contribution has largely been by moral suasion. So how do we ensure that scalability towards fostering growth across African countries? Thank you.
Thank you very much. Now we're coming to the end of our time, so perhaps if you could both tackle those two questions, and we'll have any final statements.
It's a very good example, the government employee pension fund in South Africa. I think it's the 7th largest pension fund in the world, over $200 billion. And it's obviously grown over time. Obviously the mining has played a big extent in it and in getting to that stage. I think the big thing about pension funds and growing pension funds is trust. Having that trust deficit, one, people need to trust that because you put your pension in, you expect to be able to draw on your pension when you retire. So you have to have a long-term belief in the system, in the institution, and in the market. So you have to beat that trust deficit. I think that's the first thing. I think the second thing about growing the pension funds is creating jobs. You can only pay a pension if you have a job. And so I think that's where the private sector comes in creating jobs, and the government in creating an enabling environment so the economies can grow and there are more jobs and you have more people putting into the pension fund. But I think most importantly, in terms of growing the pension fund, is there's not one model that works. South Africa had a model that has worked very well for it, which was built on its resources and mining. Other countries don't have that, so they have to build their pension fund separately. But I think it's where you create the enabling environment, you meet the trust deficit, and you mobilize, people have jobs, and then you mobilize people into believing that putting money away for their pensions is something that makes sense and they can rely on in the future. I talked about the pension reform in Nigeria. That's gone really well. There's been some pushback. So some government entities are trying to pull out of the pension fund. So the military, the police, and for various reasons want to pull out of the pension fund. But I think if the government is very strong about it and pushing everyone towards that, they will mobilize those funds to the pensions, and that's how we'll grow it.
Fantastic. Thank you.
Yeah, quickly on that question on diversification, definitely within one industry, within one country market, diversification can be done vertically, even internationally. Example are Swiss Re and Munich Re. They are in insurance and in reinsurance, and other companies like Afreximbank and TDB have created brokerage firms. Others have created captives, like the oil and gas companies around the world. They have captives, insurance captives. So that is diversification. You can have also another type of diversification, but in insurance, diversification, horizontal diversification is not easy to do because of the regulation. So you have to segregate funds. Some countries allows bank assurance, others don't allow it. So there are those, I didn't discuss that because they are obvious and they are applicable to any company in any industry. However, the one of geographical to diversification helps to ensure growth when your core market is not growing, to mitigate risks, including the currency risks, and also to enhance your credit rating in case you want to go internationally. So diversification in a uncertain times and volatility and so on. It's just like an investment. In investment, you have to diversify to be resilient in case of shocks, and there are many, many shocks around us. Thank you.
Thank you very much. That's all we have time for. We can continue these conversations after the panel. I'd like you to give our panel a very warm round of applause for this high-level quality session. Thank you.